Hello everyone, thanks for joining us today and welcome to this educational presentation of 2 simple steps to help maximize your trading. And you notice I underlined simple here because it's our belief at Pro Trader Strategies and Specialist Trading that the reason why most traders fail is because they're getting in their own way. They're making their trading far too overcomplicated and they're just having too many indicators, too many things to watch, too many news events. I'm going to show you today just how simple it is to get back on track and hopefully to help maximize your trading. For example, I'd like you to take a look at this chart right here in Yelp. As you can see, someone looking at this would say, well, Steve, there's not very much information to get a clear idea of what to do here. Maybe I should wait for the earnings or see what the institutions are doing. But with the 2 simple techniques and steps I'm going to be sharing with you today, you would have been able to generate a buy signal using one of our strategies, using these 2 components, and then ultimately been able to possibly capture a total of 12 points in the next month. So trading is really simple, as we said, once you get out of your own way. And that's my goal and job at Specialist Trading, to simply educate you. We are first and foremost an educational company. We are not about selling you the best system that produces thousands of % a year. We're not about telling you the perfect market to trade or the perfect time frame or the perfect stock. We feel that's actually not our job or our duty as educators. Our duty is simply to educate you with knowledge that has stood the test of time. Now, I've been trading for 4 decades now. I started my career on the floor of the Pacific Stock Exchange. I was on the floor for 16 years. 9 of those years I was a specialist. Specialist doesn't mean that you're any more special than anyone else, just simply means that a specialist was the title they gave to people that made markets in stock. So if you wanted to buy or sell a particular stock or equity, you went to the trader who specialized in that. So I traded as a specialist for 9 years on the floor. I traded during the crash of 1987 and the bull market that followed. So I've been involved in just about every trading environment you can think of, straight down, straight up markets. I've traded just about every system, every strategy you can think of. So in my 40 years of trading, I know what works in terms of consistency, and I know what doesn't. So that's what we do with all of our students around the world in over 110 countries and virtually every state in the United States. We try to educate you so that we can put the power back in your hands so that you can make your own trading decisions. This is our opinion and our belief, how the only way one will become a consistent trader, by making their own decisions. And you do this with sound fundamental education. Now, I'm going to educate you today with these 2 very simple, extremely simple techniques today that you can start adding to your trading as soon as we conclude in just about an hour. But as always, before we begin, we're required to first show you this, so please take a moment to view our disclaimer. Before I show you the disclaimer, I could see right here that my job is to teach you as an educator, but there is our disclaimer. Okay, I'm going to show you a lot of performance results, and I'm going to share with you a lot of different ways in which to apply these 2 techniques, but please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated. So once again, we are required to show you this. So please take a moment to view our disclaimer, and then we shall begin today's presentation. Now, I'd also like to take this time to invite each and every one of you to follow us on Twitter. There's our handle right there. You may want to copy that down, abbreviation for Specialist Trading. Every day I post different information, anywhere from signals our strategies have generated to little bits of wisdom along the way. In fact, a little while ago, I posted some great signals in the actual markets that our strategies generated, as well as currency pairs. So we follow all the markets from futures to stocks, currency pairs, even commodities. So lots of great free information, and feel free to follow us on Twitter. Okay, so let's begin. And we just want to say a few things before we begin, since I have a lot of slides to share with you, tons of information. I know other presenters like to stop for every slide to answer questions, but if we do that in today's presentation, we're going to be here for a very long time because I just have a ton of slides to share with you just to show you how simple this is. So what I'd like to ask, if you have any questions, please wait till the very end of today's class to ask them. I promise I'll get to each and every one of them, but we just don't want to bog down all the information we have ready for you. Now, the only question I will answer is the most common, and that is this being recorded? Yes, it is. So if you're having technical difficulties, if you can't hear or see everything properly, many times if you log off and then log back on, the problem will be corrected. But if you're having difficulties, we will send you a link to this recording afterwards. Pro Trader Strategies will, okay? So if you joined us late, we have a fairly good sized crowd here today. Please wait till the end of the class to ask any questions. Okay, now let's begin. Step number 1. Buy signals can only be entered above the 50 period simple moving average, okay? I know it sounds extremely simple, but if you're going long, you must always be entering above the 50. Now, conversely, if you like to go short, if you like to sell signals can only be entered below the 50. Extremely simple, but let me show you how powerful this is. Let's look at a weekly chart of the spiders. Now, everyone knows we've had a really nice rally and we continue to go up in the markets. We continue to make new highs. If we look back at this weekly chart of the spiders, the ETF or the S&P 500, going back roughly a year, we see here that we've been in a very nice sustained upward trend, right? Now, the only way you really could have consistently lost money is by selling into this, because every time we've gone down, we go down just a little bit and then make new highs, okay, even including into September of this year. So the problem is, it's easy to see in hindsight, how could we have known that in advance? Well, let me show you how simple it is. All you have to do is add the 50 period simple moving average. And where has price been in relation to that? Price has been above, going all the way back to June of last year. That's over a year ago. So there's no way on a weekly time frame you should have ever even considered shorting the market. You know, that's why we say there's no reason to watch the people on TV or go to chat rooms, because you have the information right and readily in front of you. So if someone asks you, what do you think of the market, or I listen to this guy, he tells me what to do with the market. I mean, why would you do that? You have the information right here, and it's just as easy as applying a 50 period simple moving average. Now, that's a weekly chart of an index. Let's look at a stock, DKS, that's Dick's Sporting Goods. Obviously, the only way you could have really lost money was by holding on to the stock or trying to pick a bottom, right? Because it continues to make new lows. After all, the stock was roughly trading in the 40s just last May of this year, and now it's already in the mid-20s. So someone would say, well, you know, sure, Steve, it's easy to see now, but I would have liked to know well in advance that we were going lower. Well, all you do is add the 50 period moving average. And well before this big gap down, probably based on some news that everyone uses to justify why we're going down, you could have seen that we were below already. These two bars here were below, telling you should not be buying this. Remember, if you're going to be buying, price has to be above the 50. So where has price been this entire time, going all the way back to May? Price has been below. So do you see how you automatically put the odds in your favor by using this simple tool? This is nothing you have to purchase. This is nothing you have to calculate by hand. It's right there on any charting software. You just apply a 50 period simple moving average. Now, I have a homework assignment for you. I bet you didn't think you were going to get homework in the first 10 minutes of this presentation. Just go back and research your last 10 to 20 trades. I can almost guarantee you that the reason you had losses were because you were out of sync with the 50 period simple moving average. Now, you don't have to do that now, but after we've concluded here, go back and look at your last 10, 20 trades. It's almost going to be just guaranteed that you are buying below the 50 period and selling above. So we're trying to give you techniques that have high levels of consistency. Now, does this work 100% of the time? Has it been back tested and researched and systematized, seen what the win-loss ratio is? No. It's just a tool. We don't believe in systemizing things because everyone trades differently. This is just a tool that has a high level of consistency, okay? So sometimes you will find some major bottoms below the 50 and some major tops above, and they would work great, and I'm sure you'd think, boy, this Steve guy made me lose a lot of money. But it's just like the slot machines. I often say this. Every once in a while, you're going to get a winner, and you're thinking, boy, this is so easy. I keep getting winners. But if you stay at that slot machine long enough, you're going to wind up with nothing because they're designed to have the odds in the casino's favor, not in your favor. And using this 50 period moving average puts the odds in your favor, okay? All right, so that's step one. Let's go on to step two now. Now that you know about the 50 period simple moving average, step number two. If you have a buy signal, it must close whatever bar you're looking at, whether you trade tick charts or whether you trade weekly bars. That buy signal bar must close in the top 25% of its range. Okay? So it should look like this. Remember, it does not matter the time frame or length of this bar, it makes no difference. All we're concerned about is if we close in that top 25%. That equals a buy signal bar, okay? Now, conversely, if we're going short, a sell signal must close in the bottom 25% of its range. So we're looking for a bar that looks like this, okay? And this bar is down, but we want it to close in the bottom quarter, the bottom 25%. That will be a valid sell signal bar. So let's see when we combine these two things. Let's look back at the spiders. This is that weekly chart, okay? Now, if we combine these two with a strategy that I'll be talking in just a few moments about, look at the buy signals that were generated here, okay? All of these bars were above the 50 period, and they also closed in the top 25%. Let's look at DKS, okay? Combined with the 50 period simple moving average, look at the sell signals that were all generated using these two components. Now, I know there's other components involved that I'm going to be talking about, but just these two components would have given you that edge to go short, okay? All of these bars closed in the bottom 25% of their range as well. They were below the 50. Now, this is probably one of our best strategies in terms of consistency. This is strategy number 4. I speak about this all the time. This is a strategy I learned on the floor. So let's talk about some of the highlights. Now, it's designed for all traders. So it does not matter. I don't want you to think, well, Steve, I've been trading just for a couple of weeks. A lot of this stuff is brand new to me. I don't understand it. It's extremely simple. Remember, our credo is to keep things as simple as possible. So it doesn't matter if you've been trading 2 weeks or 20 years. Everyone gets the same basic format, and then we work out from there to meet your needs. If you're a conservative trader, I personally teach you ways in which to trade it conservatively. If you're like a trader, type of trader that likes to trade 20, 30 times a day, I teach you ways in which to get more signals and setups, okay? Everyone gets the same format, but then from there, we can derive maybe 20, 30, 40, 50 different types of methods or styles in which to trade it. Now, it was designed originally for traders looking to catch quick momentum moves. When I first learned this some 40 years ago on the floor, we would apply it and get in and out in a matter of minutes. But now, once again, you could be trading this on a monthly bar. You can trade it on a weekly bar. It makes absolutely no difference, okay? Its intensity level, if 1 is the most intense of all strategies where you can't even leave your computer to make a sandwich, and 3 is the most relaxed, it's right in the middle. It's a number 2. It's a very moderate intensity level, number 2. Now, it only uses 1 indicator. That's how simple it is. So you don't have to worry about, well, Steve, I don't really understand indicators, or I'm more of a fundamental trader. That's okay. It only uses 1, and guess what? You've already got it. It's the 50-period simple moving average. That's going to tell us whether we should be buying or selling. I already gave you that rule. It's a pattern recognition strategy. So there's a specific pattern we're looking for. Now, I can't divulge what that is because that's the core of the strategy requirements. But I've already given you a part of it, which means that the bar must close either in the top 25% or the bottom 25%. You've basically got just about half of the rules to the strategy already. The beauty of strategy number 4 is that it can be applied to any time frame, any direction, in any market. So you don't have to sit there and say, well, Steve, I only trade commodities. I don't trade stocks. It works great on commodities. Or you say, well, Steve, I only trade up markets and I'm more of a long-term investor. That's fine. I'm going to show you examples on weekly and monthly charts where it works just fine. So it does not matter what market, what time frame, what direction you trade. Now, remember, as I stated, we are first and foremost an educational company. We're trying to educate you. And one of the best ways in which we have found over the years in which to educate you is by providing you a means in which to check your work. Okay, just like remember when you were in school and you had the answers at the back of the chapter in the book and you could see whether you had done them right, the test right. Well, it's the same way with this. We provide our members with automatic buy and sell indications, arrows, so that you know if you properly spotted one. So you automatically look to see if you're understanding the pattern after I teach it to you, and we study and research and we also do homework. And then once you think you fully got it down, you start looking for these setups. And if you think you've spotted one, then you just check your work by clicking on the automatic buy or sell indication to see if there actually is a buy arrow or a sell arrow there. Now, our edge here is consistency. We're just looking to put the odds in our favor. But consistency does not mean that every trade is going to be a winner. In fact, I will show you some losing trades. What consistency means is that you have a strategy or a method that has the capability to make back those small losses, and usually and relatively very soon. So that's what we're looking for. We're not the type of company that's going to come out here and say, this system works 110% every month. It's phenomenal. You will be able to retire in 2 years. We don't believe that. What we believe in is sharing sound fundamental education that has stood the test of time, so that over time you will have a 2 steps forward, 1 step back approach to your P&L, your equity. That's what we're looking for, because what will sustain you is not some fly-by-night system that works fantastic 1 year and then gives it back the next. How many of you have gone through that already? What will sustain you is a method that is consistent, that has small losses from time to time, just how an athlete won't make a basket every shot, but over the course of the game will wind up having a great game. Okay, it's the same with trading. You'll have small losses from time to time, but a consistent method will have you overall doing well. Okay, that's what we're trying to instill in you with all of our methods. All right, so let's look at these examples once again, sharing with you what we can. Remember, we can't divulge the pattern, but we can show you just about half of the rules, which are the 50 period and the bar closing in the top or bottom 25%. Now here's Yelp, okay? Now let's just say that you think there was a buy signal generated here because, well, we have a bar that closes in the top 25% of its range, okay? That's one of the main rules. And in addition to that, we are now above the 50 period simple moving average, okay? So there's just a couple of more rules, and one of the main ones is being able to spot that pattern. So let's just say everything comes into place, all the requirements are met. Now, if you want to check your work using our new PTS Primo charting platform, it's as simple as this. You would simply, after your buy signal has been generated, to check your work, you would have seen that this stock would have gained 12 points, okay? Let's look at some more examples once again. All right, here's CCI. Now, someone looking at this would say, well, okay, there's not much direction here. In fact, it looks like we're going to roll over. We've kind of made this high. The volume really dried up here. Going up, it wasn't strong at all. The breadth was not good. The institutions were not buying, and we've hit some major resistance. So just the information that I've gotten from my sources and from my chat room and from TV, this is kind of rolling over and getting ready to go make lower lows. And on top of that, I don't like the market. A lot of people are saying that there's bad news going on around the world, and I think the market's going to go lower. So why would I want to buy anything right now? Do you see how all my decisions in that decision-making process were made out of standard conventional wisdom? Those are the things that are supposed to work, right? Well, if they work so well, why do 80% of all traders fail? It's been estimated almost up to 85% of all traders. And when I say fail, I don't mean you're going to go into a small period of losses. It means that you're going to give back everything you started out with. So there's no consistency in those things. Remember, my mentors taught me that it's the simplest of trading plans that have consistency, not the more complicated ones. So when you keep things simple, well, you see here that all you have to do is check with our PTS Primo charting platform. If you think that there actually is a buy signal here, because actually we close in the top 25% and we're above the 50 period moving average, you just check, a drop down window appears, you click on signal arrows, and guess what? It is a valid buy signal, so you're correct. So you don't even have to plot the 50 period moving average because the PTS Primo charts does all that for you. So now you know you have a valid buy signal. So you're not going to listen to all those outside sources, what my mentors called noise. And you're just going to say, listen, the market is telling me it wants to go higher. That's the only thing I listen to, the market. And CCI gained 9 points in the next 3 weeks, okay? This was just about a month ago, 3 weeks ago, at the middle of August. How about CMG? All right, someone looking at this would say, well, Steve, okay, I understand your simplicity approach and that you don't listen to all these outside sources. But Steve, we've hit some major support right here, okay? In fact, it looks like a double bottom. And I know for a fact that the earnings are coming out next week and they're going to be fantastic. So this is just a sell-off here. This is a chance to pick up some cheap stock. The broker that I belong to is really recommending this, and all the institutions are buying right here at these levels. Once again, do you see where my source of decision making is coming from? It's coming from what other people or outside sources are saying. Make your decisions based on one thing, the chart in front of you, because that's the source. That's what you're trading. So that's where you should be getting your information from, not from outside sources. And we keep things simple. We only have one indicator and we're looking for a pattern. So let's say you're not listening to that stuff anymore. You've took the leap of courage and you're saying, you know what? After everything I've studied with this pro trader strategies and specialist trading, there's actually a sell signal here. So let me just check my work. You click on the strategy number 4 tab up in the screen strategy tab. Click on signal arrows just to check. And yes, indeed, there actually is a sell signal. So where everyone is saying this is where you should be buying, you're going to say, you know what? I'm going to listen to the market because the market is telling me it's going lower. Okay. So you decide to sell and check it out. CMG dropped 110 points in just 2 months. Okay. Now, do you think you would have lost any money being in sync with the overall trend? No, you would have made money here. The only way you would have lost money is by trying to buy or go against the trend. Now, just by the platform generating a sell signal means that you're automatically below the 50 and you automatically meet the requirements of the pattern and you've closed in the bottom 25%. So that's all you have to do. Now, don't worry, and you have these really strong trendy moves here. Don't worry if you miss the first one because many times more signals are generated along the way. Okay. All right, let's look at LMT Limited. Once again, someone looking at this will say, well, Steve, I don't have any news or information about this stock. I've never traded it. It looks like it's actually doing nothing coming into August here. In fact, we're just kind of in a range. We're going sideways, so I'm not going to trade this. I have no information. Well, actually, you have a lot of information because you're not listening to the right thing for information. You're not listening to the market. And the market is telling you this wants to go higher. Now, we have a bar here that closed in the top 25%. As well, it's above the 50-period moving average. The reason we know this is because the strategy generated a buy signal. So it automatically takes all of that into account for you. So you have the go-ahead from the market, not from some guy on TV, but from the market telling you, I'm going higher. So our job as traders is not to fight it. It's not to predict it. It's not to try and figure out what it wants to do through the earnings. I mean, that's silly. Our job as traders is just to listen to what the market wants to do. And then once we find out what it wants to do, we jump on board. Now, had you done that with Limited, well, 17 points in 2 weeks coming into the first week here in September. Now let's look at fast. Now every once in a while you will get some setups. It's kind of ironic that nothing really fast happened here. You had 3 sell signals, but nothing really happened in fast. In fact, it was very slow. But oftentimes, if you stick around, you will get that trend that you've been looking for. So ultimately, this just did kick in. But many times it will happen much quicker. As we see here in GWW, we had a sell signal here in the middle of August, and coming into September, we gained 13 points quickly in just 3 weeks. All right, now in times such as this, we look in Apple, it looks as if absolutely nothing has happened. In fact, this was just a couple of weeks ago, in the middle of August, middle to end of August in Apple. We're basically just in a range. In fact, we're just going straight up, straight back down, straight up, and straight back down. Someone looking at this would say, Steve, these are the type of markets you don't want to get involved in because the market basically doesn't know what it wants to do. And if you're listening to the market, okay, I understand that concept, but it looks like the market is telling me that it doesn't know what it wants to do. Okay, you're right, it may not. But guess what? We met all of the requirements using strategy 4 because we closed in the top 25%. Even though you can't see it, we're above the 50-period moving average, and that requirement was met with the pattern. So in order to check our work, we click on the strategy 4 tab. The drop-down arrow appears. We simply hit signals arrows, and guess what? That's a buy signal, so we were right, okay? So the market now, even though it's been going up and down, now it's saying, I think I'm going higher. So all you have to do is take that signal, and Apple gained 7 points coming into September, okay? Just in a couple of weeks. Now, here's what we mean about consistency. As we see here in the QQQs, okay? That's the ETF or the NASDAQ index. We see here we had a sell signal. It met all the requirements. the software and the platform generated a sell signal. Did this work out? Well, not really. I mean, it went down maybe a half point, and then you most likely would have been stopped out. And then guess what? A buy signal was generated. So you may basically lost about a point or so, but had you taken the second signal, you would have made it back and then some. And the beauty of this is that you actually wouldn't even have to trade the QQQs. You could have used this as a market directional tool. So let's say that you thought, well, I get a sell signal in the QQQ, so even though I don't trade them, that must mean that the market's going lower. Well, it didn't really go lower, but the beauty is it gave you a buy signal later on that represented hundreds of points in the NASDAQ. Now here's a great example of this consistency, and from time to time you will see this. Remember, consistency does not mean, oh, that if I have a consistent method, it means that I'm having winners all the time. No, it doesn't. It means that you will have losses as well, but consistency means you're able to make back those losses quickly. So as we see here, Netflix in mid-August generated 3 buy signals, and each one most likely was a loss. Okay, so at this time, you're probably ready to throw your computer out the window, saying that this guy Primo is a hack, none of this stuff works, and I'm going to try one more signal, and I'll give him the benefit of the doubt. So we have one more signal here, a sell signal. So you're thinking, well, maybe it's going lower, and this is the one that's going to make everything back. So you go short, and guess what? You get stopped out, and now we're going in the opposite direction, right back up. At this time, you're probably ready just to say, I quit trading altogether. Nothing works. Everyone's just sold me a bunch of stuff that doesn't work. So you don't even take that last signal. And this is the one that finally takes off. Okay? Now, having said that, that would have been a tough situation to go through. And from time to time, that may happen. That was just very recently coming into September. So we have to ask ourselves, is there any way we can increase our odds? For example, we can see this ESRX trade where we had a valid sell signal. Now, this looks pretty good. We've been going up higher. All right, it meets all the requirements. So you go short, and then look what happens. Okay, now we don't even have an extra chance to make back the money because we don't have another setup here. So once again, how can we increase our odds for success? Even though there is a high level of consistency in strategy number 4, is there any way we can increase our odds for consistency? Well, yes, we can. We add the pet D. You've heard about me speaking about this many times before. This is another one of our most powerful as well as popular tools that we have here. And for those of you who are not familiar with what the pet D is, it's a proprietary algorithm I was introduced to on the floor some 4 decades ago. Now, I first used it then, but we had to calculate it by hand. Well, what we've done now with high-speed computers and with programmers is programming it into a color bar tool. So there's nothing you have to do. There's nothing that you have to calculate. There's nothing you have to figure out or formulate. It's all done for you simply by coloring the bars. Now, it colors the bars and enables you to identify the short-term trend. Now, where the overall trend is determined by the 50-period moving average, the short term is identified with the pet D. As we see here in these generic charts, a series of green bars represents an uptrend, a short-term uptrend, whereas a series of red bars simply means you have a short-term downtrend in place. Now, a real-world example here in Aetna, as we can see, here's an uptrend, and this is where most traders like to get in, somewhere around here. They're convinced that the stock is going higher. The minute they get in, look what happens, okay? Is there any way we could have helped us not get in so late and then get out prior to the market really falling out of bed? Well, even though the pet D doesn't pick tops and pick bottoms, it's not a strategy, it can help you with the trend on the short term, because you would have known well back here that the trend was up. And well before this stock fell out of bed, you would have known well in advance that the trend had changed. That's how simple it is using this short-term trend identifier. So there are many uses, probably dozens and dozens of uses, and how to apply the pet D to your trading. But one of the best ways, and probably the most powerful ways we have learned through our students, is something I'm going to show you in just a few seconds here. Now here's another chart of an entirely different market. Here's the IWM, that's the ETF for the Russell 2000 index. Now here's a weekly chart, okay? How could the pet D have helped us? Well, we simply apply it, and we see here how it changed trends and got us in prior to the market taking off, okay? And we knew well in advance that it was going to be coming lower. That's on a weekly time frame. We can go to a 10-minute chart of the E-mini futures, okay? It's going back some time ago, but you can see how powerful it is. The whole time it kept you in, and you could have used this then to get out of the market or just to know that we're now in a downtrend. A monthly chart of British pound for all you currency bar traders, okay, currency pair traders. We see here that we were going up on a monthly time frame in 2014 all the way to 2015, and since then we've been red, okay? So it does not matter what market, it does not make a difference what time frame. The PET-D can be applied to anything. You've seen all the many different applications, but one of the best applications I just spoke about a few minutes ago, and which I want to talk about today, is as a signal confirmation tool. This is probably one of the most powerful ways to apply the PET-D. And when we combine strategy number 4 with the PET-D, we have found that we have this synergy for success, this synergy for more consistency in our trading. And that's why we call it Specialist Trading's Dynamic Duo. We have not found this with any other approach, and it works tremendously with strategy number 4. So let me show you what this means here. Now we share with you some of the signals with strategy number 4. Now when strategy number 4 generates a buy signal, the PET-D must color that bar green. That's it. That's how simple it is. We don't care about, looking back how many bars before or how many bars after. All we care about is once there's a green arrow below a bar, that entire bar must also be colored green by the PET-D. Okay? Conversely, if we get a sell signal with strategy number 4, we don't care if it's a weekly bar, monthly bar, or a tick chart. It makes no difference. That sell signal bar must be colored red by the PET-D. That will give you an extremely high level of consistency. So we've ramped it up a notch. Does it work 100%? No, you will have, once again, small losses. But now you've increased your odds for consistency tremendously and significantly. All right, let's look at this example once again. Remember, small losses may appear from time to time as we look at that example in ESRX. Here was a valid sell signal with strategy number 4. But in order to have that added level of consistency, what you would have done is, okay, how would I have known in advance that I was going to lose money? Well, look what the PET-D did. The PET-D colored that bar green. Do we take sell signals if they're colored green? No, sell signals must be colored red. So you would have known in advance that you never would have taken that trade. So some of the best trades are the ones that you never take. So that's the beauty of the PET-D. It will keep you out of trouble. We could also apply it to that Netflix example. Remember we had those 4 losses in a row and then we quit on the very last one and that's the one that worked? I'm sure you've all gone through that before. You traded and traded and finally when you throw in the towel you say this doesn't work, then it works tremendously, right? Well, let's add the PET-D. Remember, in order to buy, the bars must be colored green. So once we added the PET-D, what color are these buy signals? They're all red. So we would have not have taken any of these first 3 trades. None of them would have been taken, okay? You would have saved all that money. Now we have a sell signal here. It's colored red. So we would have taken that. Now that wasn't a winning trade. That was a small loss. But guess what? We still have enough money in our account because we didn't blow it by losing on these 3 trades. So that's okay. Small losses are fine, just as if not every baseball player is going to hit a home run or even get a single every time he comes to bat. Doesn't mean he's not a good player and that he has to, be sent down to the minors. He's still a good athlete. The same way, this is still a good strategy with a minor loss. So you would have got stopped out, and then you have another setup, another bar later to go long. In order to buy, the bars must be colored green, so you would quickly reverse and go long Netflix. And as you can see, you would have made back all the money on this losing trade and then some. So this is how the PET-D can really add to your consistency. Let's look at some more dynamic duo examples just to show you how powerful these techniques are. Okay, we're looking at CCI. Remember we looked at that prior and we said okay, well this stock looks pretty good, but we're not really sure. It looks like it may be rolling over. I don't like the market as a whole. Well, the first thing you would do is simply, once you got a strategy number 4 signal, is that you would click on the PET-D strategy tab right here at the top. And once you click that on in our new PTS Primo charting platform, you're going to get the bars automatically changing. And what color do buy signals need to be? They need to be green. So that is a valid dynamic duo setup. That's giving you the green light. If you want to take this, the market and the PET-D is telling you this is a valid signal with a high level of consistency. And there were 9 points in just 3 weeks. How about CMG? Remember we talked about that, how that market just went straight down. How could we have known that in advance? And how could we have known for sure to take that trade? After all, we like to look at fundamental news, and all the fundamental news said that there were good earnings coming out and that this was a buy, right? Well, all we had to do was click on the PET-D, and once again, we know well in advance that all the bars were red. There was absolutely no reason that we should have been buying this well before the sell signal was generated. And as well, the sell signal was generated red as well. So we have a nice high level of consistency trade here and 110 points in 2 months. By the way, all the bars remained red going down. Let's look at the limited again. Once again, you said, well, this actually has no, kind of edge here because we're just basically going in a sideways range. There's no trend. But if you add the PET-D, or you should say, first thing is you add the strategy, there's a signal there, and then you add the PET-D and see there was only one red bar and that this setup is green. So that's giving you the confidence to take the trade and 17 points in 2 weeks. Now we can apply this to intraday trading. Here's an hourly chart of the E-mini futures, okay? This is going back to just the last couple of weeks, I believe a week and a half ago. And at the last day of August, as we can see here, we have a buy signal generated and another buy signal generated. So strategy 4 is saying that these are valid buy setups. But, okay, I could see taking this one, but we've had a very nice run up. Why would we take this one? Well, you click on the PET-D and both signals were green, giving you the confidence to remain long, and the E-mini gained 27 points in the next 2 days. That's roughly $1,300, $1,400 per contract. That's how simple it is. And see how the PET-D had all these bars continue to be green. In fact, there was one more signal generated right here. Here's the Canadian dollar. Okay, now here's consistency in its best. We have a buy signal generator right here, which obviously did not work out at all. And then we have 3 sell signals. That worked out. The first 2 worked out okay. How do we know this one's going to work out? Okay. We add the PET-D and we see here that we never would have even taken this buy signal. Why? Because the buy bar is colored red. Remember, in order to go long, the bar needs to be colored green. In order to go short, it needs to be colored red. So there was no buy. So we didn't lose any money. We could have taken each one of these signals with confidence because they're colored red. And regardless of which one we took, we had about 1,300 pips in our favor in the next 3 months. And remember, when you have a strong enough trend, you get many more signals generated. As you can see, here was another sell signal generated, not confirmed because it was colored green, so you would not have taken it, but 2 or 3 bars later, you could have gotten in with this one and then this one again as well. So let's recap. We gave you 2 of the rules to strategy number 4, which is always apply the 50 period simple moving average. If price is above, you will only be a buyer. If price is below, you will only be a seller. In fact, I gave you a homework assignment. Go back and look at your last 10, 20 trades. I can almost guarantee you would have lost because you were out of sync with that simple rule. Then, once you know what side you're on, look for bars that close either in the top 25% or the bottom 25%. Those are 2 of the most basic standard rules of strategy number 4. That constructs our most consistent strategy to date. But remember, it's a consistent strategy, meaning that not every setup's going to work. How do we increase our odds for success? We add the PET-D as a signal confirmation tool, one of its many, many different uses, different ways in which we can apply it. When we combine both of these together, we have this synergy for success, which we call Specialist Trading's dynamic duo. Now, I want to ask you, before you ask me any questions, do you think these edges could have helped your trading this past year? I can honestly say yes. I think most of you will agree, because once you go back and look at your 10, 20 trades, I think you're going to agree how much more consistency you could have added simply by applying those last couple of rules I shared with you. Well, what if I could give you a great deal simply by attending today? we're going to offer you a great discount. And we're talking about upwards of a 50% discount. This is our or I should say our strategy number 4, Pet D Dynamic Duo Special, as you can see here. Instant course access, you're going to get all the instructional videos telling you exactly all the different ways to enter, to exit, where to place your stops. This comes with the signal alerts. As well, it comes with 4 separate and different Pet D trading techniques. It includes the add-ons and mentoring experience from yours truly, someone who's been trading these techniques for over 40 years. But we're not going to stop there. Remember, all the charts and all the displays we showed you today were generated using our new PTS Primo charting platform. Well, we're also going to throw that in. This is the educational portal that teaches you how to listen to the market. You saw how simple it is. Everything is just one click away. All the access to the 50 period, to the strategy, buy and sell arrows, the Pet D is all right there in front of you. Now we're going to throw in 12 months of the PTS Primo charts. Now 12 months of using our new platform would run you over $1,900, but don't worry, we're not going to charge you that at all. In fact, we're not going to charge you anything. We're throwing that in totally free. You're going to get 12 months, 1 year free use of our new PTS Primo charting platform, the educational portal you've been waiting for. This includes our scanner. Now, I don't know about you, but I've used just about every charting platform you can think of to enter orders or just for education, just for looking at their charts and their tools. And one of the worst experiences I always have is the ability to use their scanner. Either, it's just too complicated or I can't find where it is, and it's always been a hassle. Let me show you how simple our scanner is. I specifically designed this with Pro Trader Strategies just to make it simple. So for all of you traders there that aren't able to be in front of your computer on a daily basis, but would like to come home and see where the signals have been generated or follow a list of stocks, basket that you have either created or a list that we've generated for you, here's how to do it. It would take you probably less than a minute each night. Let's say you're watching Strategy 4 because you're part of the Dynamic Duo package. All you have to do is click on the tab there in the top of the charts I shared with you, and you'll see the drop-down window appearing, and just click on Scan. Now you'll have this page that appears, and once it says load symbols, you would simply click that on. Now we provide you with a load of the S&P 500, the NASDAQ 100, or you can create your own basket of stocks, and once you click that on, it will generate the stocks that you're interested in, or the markets that you're interested in. It takes about 10-20 seconds. All right. Once that has been formatted, then you click on Scan. It takes probably about 30 seconds for it to generate either the buy or the sell signals. Buy signals are generated with the green bars right there. Sell signals are with red. Now, had you done this just last week, you would have seen that the scan generated a buy signal in PRGO. Someone looking at this will say, boy, how can this be a buy signal? This stock is basically going sideways. But on the 31st, just about a week and a half ago, this generated a buy signal. Now, if you wanted to have a little bit more added assurance, what would you do? You'd click on the Pet D, and you can see now that even though the market looked as if it was going sideways, for the past 2 weeks, all of the bars were green. So the Pet D was telling you we're not in a rangy sideways market. We're in a short-term uptrend. So we should only be buying this. And as well, Strategy 4 generated off of a pattern and the 50-period moving averages is to say buy it as well. 2 totally different requirements. So if that doesn't give you the confidence, I don't know what does. So on September 1st, you could have gone long and generated 12 points in just the next 2 weeks. In fact, I think this chart was taken up until yesterday. I think PRGO is actually even higher today. And that's just one of the stocks that was generated just not even 2 weeks ago. Okay. So this is all included in the scanner. So we're throwing in this Dynamic Duo combo plus the PTS Primo chart. So let me just show you how much you're saving here. If you just purchase the strategy number 4, Momentum Trader strategy, that would roughly cost you close to $700, okay, $695. If you purchase separately the Pet D, that's close to $3,000, that's $29.95. And a year's worth of the PTS Primo charting platform is over $1,900. So basically, all 3 of these things would cost you about $5,601, okay? That's including the 1 year of the PTS Primo charts. We're not going to charge that at all. We're going to slash that close to 50%, We're dropping the price down to $29.95, which includes the 1 year of the PTS Primo charting platform. Okay, we're also going to have options for payment plans. So if you can't come up with the $29.95 one lump sum, you can put down a small deposit and you can still be up and running with all of this access and with my own personalized mentoring correspondence. This is a great way to finish up the year for a great, great discounted price. You're getting all these three things, and I can't think of a better way to get your trading back on track. If you've been struggling for the first 2/3 of this year, now is the time to get on course, okay? These are things that I use on a daily basis on my own personal trading. So I can't think of anyone better to educate you. This was someone who uses these things on a daily basis. Here's how to take advantage of this. Contact Pro Trader Strategies, my sister site. Excuse me. I would recommend actually calling them because you can, for a small deposit, you can still be up and running, and you can put down a payment plan structure with them that will be fit to meet your needs. So I would call them. There's no obligation. They'll give you more information about what's offered, and they have many trading consultants manning the phones right now. So give them a call at 310-598-6677. Now, if you're convinced and you're ready to go and you want to start trading in the next half hour with this, well, that's the link you see right there at the very bottom, but it's not a live link. You'd have to copy and paste that onto your browser. The best thing is to go to the chat box on the far right of the GoToWebinar column you see there, and in the chat box, they've posted a live link. So all you have to do is click that on, and it will automatically take you to the sign-up page, and there's lots more information, okay? Now, I promised you I would answer all of your questions. We have about 10 or 15 minutes left. So I'm going to leave this page up here while I open up the question and answer box. And thank you all for waiting. Let's see. Paul is asking, what's the difference between the slow PET D and the fast PET D? Oh, that's a good question, Paul. We actually offer you two versions of the PET D. The fast PET D is basically just the standard PET D. It's the one that I've been using, and that is something that's probably used 3/4 of the time, 75% of the time. Okay, that's just the standard model. What the PET D is for keeping you in trades, and we explain this in the course. The slow PET D is a slower calculation. It's a slower formula that won't have as many up and down, red, green. A lot of times when you have these kind of rangy markets, you will oscillate back between a red bar, green bar, red bar, green bar. The slower model will keep you out of that noise a lot of times, and a lot of our students like to look and use it for staying in the trade longer. So let's say you're the type of trader that likes to get as much bang for your buck and stay into the trade. Well, we show you ways in which to do that with the slow PET D, okay? Pip, hi Pip, is a new student of ours in the Forex College. That's right, yes. Remember, all these things that I shared with you today, even though there was an emphasis on stocks, they can be applied to any market, okay? The majority of our students around the world do apply this with stocks because there are more stock traders than anything else, but we have several students and members in Europe that only apply these for the currency pairs. We have other people in America and around the world that apply this for currency, or I should say for Forex as well. So it makes no difference. And we also have students that apply the dynamic duo on commodities. It works in all markets, all time frames. Let's see. Pip is asking, can you explain the significance of the fact that some of the candles in your examples are filled in and others are hollow, but are the same color? Thanks for the webinar. You're more than welcome, Pip. Well, the point is that we'll go a little bit deeper into this in the course, but when I first started trading 40 years ago, I actually learned how to apply candlesticks from a Japanese bank. Someone was trading downtown by the stock exchange in a bank and shared with me the way they actually were applied in Japan. And the way they were was that the original format for the candles were in a hollow structure. In other words, it was a very difficult concept for Westerners to understand candlesticks. They weren't used to it. So what the West did and what all these charting platforms did is automatically color them. If the day closed above the opening, in other words, it was an up day, they colored the bar green. And if the day was down and it closed below the opening, they colored the bar red. That was just something that the West invented in order to simplify it and to have a lot of people purchase their platforms so that they could use the candlesticks. A lot of Westerners had difficulty in understanding candlesticks. But the original use was, the Japanese never used it that way. The way they did it was just a hollow. They used it on a white parchment paper, which was the way I was taught, on paper, and it was a white background. And an up day was just simply a hollow bar. It had a black outline, but you knew it was up because the background was white. And a down day was a dark filled bar. Now, what people get confused is they say, well, okay, so how do you apply the PET D? Well, if the PET D is applied to an up bar, it will color that bar a light green. Applied to a down bar, even in an uptrend, you'll see a light green on a black background. It's hard to explain, but it makes it much easier to understand once you apply the hollow bars as opposed to standard westernized candlesticks. And once again, being old school, I want to teach you the way it was taught to me. That's how it's easier for me to explain to you. So it would be too difficult to use the standard formation for candlesticks the westernized way and then apply the PET D. You wouldn't be able to know if it was a down bar, but it was colored red or colored green. It would be too difficult. So that's why we keep it with the standard format. And once you get this, if you said you're going to be a new student in our Forest College, it'll make a lot more sense once you're able to apply it on a daily basis, okay? In fact, many of our students ask the same questions and they say, well, Steve, I'm not used to this. I'm usually used to already the bars being green and red, even if I don't have the PET D applied. But once they apply this and they get used to it, they tell us through their testimonials that it's much simpler and they like this even better. So that's why we teach it that way. It makes it a lot simpler with the PET D. I hope that answers your question. That was kind of a long-winded answer there, but trust me, in the long run, it'll be a lot simpler to understand. Now remember, we're getting towards the end of 2017, okay? I can almost go, we have a fairly nice sized crowd here. If I went through the list of all the people, I could almost guarantee that none of you are near where you thought you'd be in January of this year. I can almost guarantee it, because that's the way most traders trade. We always start out with these hopes and dreams. We purchase thousands and thousands of dollars worth of systems and ideas and chat rooms and trading rooms and all these subscriptions. And then usually by the first quarter, we know that we're never going to get there because nothing is working for us, or there's no consistency. Sure, you may have a couple of good trades, but then it gives it all back and you're right back where you started, or even worse off. So here's the end of the year. Here's something that I have personally been using for 40 years. It's helped me. Now, even though we can't promise you that it's going to sustain you for 40 years, these are highly consistent methods, okay? And the reason why we believe in them is because we're educating you. We're not promising you the world. We're promising you that we'll educate you on how to apply them properly. But you're going to have to make your own decisions. So many people come new to our programs and say, okay, Steve, if I join, then what kind of numbers and profits will I be making by the end of the year? And I always say the same thing. It's up to you. It's directly proportional to how much work you put in, because you're going to be in charge of your trading, not me. Okay? That's like someone saying, okay, Steve, well, if you teach me how to play golf, then what's going to be my score by the end of the year? Well, that's going to be up to you. I can't tell you that. It's how much, depending on how much work you're going to be putting into it, how much you're going to practice, how much you're going to devote to the game. Okay, I'm only your instructor, but you're going to have to make the decision. And this is why so many people have difficulty with this concept, because they want someone or something to do it for them. They want to go to a site that gives them signals every night and tells them what to do, or they want some guy to tell them in a chat room what to buy and sell today and where to get in, where to get out. Remember, I don't believe in that. That's a recipe for disaster. In my 40 years, I have found out that there is absolutely no consistency in mirroring what someone else does. The only way you can become a consistent trader is by making your own trading decisions. If that really works, then why aren't the majority of traders successful? It's the opposite, because it doesn't work. It'll work every once in a while, but no two traders should ever trade the same. That's the great truth in trading. You should all be trading differently. So people say, well, how do I do that? The way you do that is being supplied and mentored with sound fundamental information, and then have someone mentor it to meet your needs so that you can make your own decisions. And then going off on your own, all right? You don't have to follow someone else and pay all these exuberant prices to be able to listen to their signals on a nightly basis. You'll be able to make your own trading decisions. So that's what we're providing for you, okay? It's the end of the year. If you're really serious about finishing out the year strong, this is a great offer, nearly 50% off I can't tell you how powerful these tools are, and I'll be there with you every step of the way, okay? Remember, this comes with my personal email address. You can send me emails whenever you'd like, and I will answer any question you have so that you'll fully understand the process. So the best thing to do, in my opinion, contact Pro Trader Strategies. If you have any more questions, there's no obligation at all. You can call them at the number right there in front of you, and they will answer any question you may have. Plus, they'll put together a payment plan for you. You don't have to come up with $29.95 right away. For a small deposit, you can be up and running, and I can be answering your questions possibly this afternoon, okay? So as we conclude, I hope you got something out of this. I hope you see the power behind how simple trading can be as long as you're getting educated with the correct tools. Thank you so much for attending today. I really wish you the best of luck trading, whatever your decision is, but I look forward to all of you becoming students of mine at Specialist Trading. Thank you so much. I'll see you next time. Bye-bye.